Energy storage. It's one of the cornerstones of the renewable energy revolution. But right now, it's facing a big paradox. At the 2025 Shanghai Energy Storage Expo, high-capacity 684 ampere-hour cells and liquid-cooled cabinets stole the show. The tech is moving super fast, yet the market feels strangely quiet. Prices are falling fast. In the first half of 2025, the average bid for lithium-ion energy storage systems in China dropped to around 0.48 yuan per watt-hour, almost 50% lower than last year. Profit margins? Less than 5%. Many companies are barely making money, or even losing it. Some systems, like Wocheng New Energy's underground Star Obsidian, were priced at just 0.38 yuan per watt-hour, nearly half the market average. Meanwhile, by the end of 2024, China's cumulative new energy storage capacity hit 73.76 gigawatts. That's over 40% of the world's total. Big numbers, but behind them is a harsh reality. The more energy storage is sold, the more companies are losing. So, what's really going on? Is this a sign of tech breakthroughs, or a vicious price war? Let's break it down. Domestic market. Lithium-ion cell prices keep sliding, driven by overcapacity and fierce competition. Overseas market. Export markets that were once profitable aren't so safe now. Prices barely cover domestic costs plus shipping, wiping out any profit advantage. Technology versus price. Yes, higher capacity cells and longer cycle life can save some money, but oversupply and cutthroat competition erase those gains fast. Fast tech updates also devalue inventory, so prices drop even faster than costs. The result? Selling more, but losing more. That's the new normal. External pressures. And it's not just domestic pressure. In the US, tariffs on Chinese energy storage products led to the cancellation of 21 gigawatt-hours of projects, and another 19 gigawatt-hours were delayed. In the EU, new battery regulations that came into effect in August 2025 impose stricter rules on carbon footprint, recycling, and supply chain compliance, which pushes up costs for manufacturers. The outcome? Overseas expansion is blocked, high-margin markets are shrinking, and domestic factories, running full out, are forced to sell locally. Emphasis. This sparks another round of intense domestic price competition, basically, a race to the bottom. Other challenges, and price wars aren't the only problem. Patent battles. Over the past 3 years, leading energy storage companies have been involved in nearly 60 lawsuits. Patents are supposed to encourage innovation, but in reality, they're draining resources. Smaller players get squeezed out, leaving deep-pocketed giants in control. Capital bubble. A surge of financing and IPOs has inflated valuations, especially for AI and data center-focused storage solutions. Some companies grow fast in revenue, but still don't make money. For example, Lithium and Reptbatero raised multiple rounds of funding, rapidly increasing valuations, but delivering very limited earnings. Shenzhen, facing fierce competition, even redirected funds originally meant for storage projects into low-carbon data center upgrades. The way forward. 2025 has been called the year of the big cell. CATL, EVE, and Sungrow launched 500 ampere-hour plus cells, cutting costs per kilowatt-hour. New storage models, underground storage, hybrid flywheel lithium systems, and intelligent modular arrays, extend long-duration storage, improve safety, and integrate smart grids. Overseas example, Huawei's Red Sea microgrid in Saudi Arabia combines 400 megawatts of solar with 1.3 gigawatt-hours of storage, providing 24-hour renewable power and showing rapid system response. Competition is shifting from pure price wars to a triangle of safety, economics, and service. History teaches us one thing: brutal price wars ultimately leave only a few large, technologically advanced companies standing. Investment focus is moving from sheer installation volume to profitability, supply chain security, and regulatory alignment. Companies that keep innovating will enjoy a first-mover advantage. Energy storage isn't just a tech race, it's a high-stakes game. Capital, policy, and supply chains decide who survives. Excessive price wars could trigger financial collapse, Some even warn of a renewable energy evergrande. But tech breakthroughs and growing demand show huge potential. The big question remains, is the industry entering the dawn of maturity, or just hovering on the edge of a bubble? Only the resilient will endure.